What is up, YouTube Nation? It's your boy Briff here. Welcome to the show. We have tons and tons of news in the cryptocurrency space, so let's get right into it. All right, to start off, Bitcoin has been very volatile since yesterday, the beginning of the trading week for institutional investors in the stock market. But Bitcoin is 24 hours, so it had a couple of days of trading before the big banks got in. Bitcoin had a huge drop. It made another support line around this $30,080. It is in a slant pattern right now, and we may see the price continue to come back down to this support line and may have a bounce up out of this slant. Usually when you see these slant patterns in trading, that means you have a better chance or better percentage of going long. News came out that the OCC has gave access to banks to run nodes, buy stablecoins, or use stablecoins, or make payment networks for stablecoins. This news came out from Brian Brooks, the U.S. federal regulator. And if you guys don't know who this guy is, he worked in banks, he's a lawyer, and he worked for Coinbase between 2018 and 2020. So he's actually moving the product that he basically is one of his babies, the stablecoin, the USDC from Coinbase. That's his little baby. He's trying to let it go mainstream. Did you hear that? He's trying to make it go mainstream. So that news actually popped up Bitcoin because it was falling with, guess what? The markets from yesterday. You can see the NASDAQ, the Dow, the Russell, the S&P 500, they all fell yesterday, which still tells us that Bitcoin has a correlation with the main markets. Now, what does this mean when these banks have the opportunity to use stablecoins and run nodes? Well, I'll give you a secret. I run a Bitcoin node, so I get to see the validation of ledgers. There are other nodes you can run out there where you can get interest. For example, Ethereum, if you have 32 ETH, you can get interest from running that node to protect the network. These banks are going to get into these coins that are going to have high interest rates. So I'm thinking, guys, look into Ethereum. Maybe that's why the price pumped. Look into ADA, look into Altcoin, and any other cryptocurrency where you can stake by just holding it in a wallet. Because these banks need the interest. They can't give out too many loans because the economy is bad right now. So they're looking for another stream of income. So just be aware of that. Some more news came out that the Ukrainian government picked Stellar Foundation to help build their digital currency. Why would they use Stellar? Well, first of all, Stellar Lumen, okay? Lumina coin is a fork of XRP. Isn't XRP in trouble? Ripple with XRP? Yes, they are. But you guys got to understand, if you ever use XRP, it's probably the fastest thing I've ever seen in my life. It's up there with Visa and them. So like, you want to send something, as soon as you hit the send button, the money is there. Now, another reason why they're using Stellar is because it's backed by IBM. IBM has a huge stake and a huge partnership with these guys. Let's just see how this plays out, and if Stellar Lumen creates this digital coin and it actually goes into production and goes into the world for this Ukraine economy to use, watch the price of Lumen go bonkers. So there's been a shortage of BitMain miners. The newest miner is the S19 with like 95 terahash. But the shortage is so bad, there's been a pre-order until August. That is crazy. BitMain did have problems financially. That's why they closed up shop in the US and Houston and some other places. And one of their top leaders, or the one of the founders, he stepped down to let other people run the company. And right now, every bull run, they gain money. I think they had billions of dollars before. Now they have billions of dollars again. These guys are making all types of money, and due to the high volume of purchasing their miners, there are other miner companies out there. They have doubled the price just to cash in, and people are still buying the miners. So are people expecting the price to continue to go up? Because I wouldn't buy a miner that's overpriced like that. But I guess the FOMO is set in. People want to get in. So I decided to go and do some investigations. If you guys want to become miners, I went on eBay and I looked up S17 Plus and S17 Pro BitMain miners. So those are the generations under this. One of them went for $4,000. I was like, just overly outpriced. But another one is actually on auction for like $1,500. So I'm gonna put both of these in front of you guys to see what you get. Now, what you're looking for is how much you're gonna make daily. Because usually people take the Bitcoin and sell it and bring in profits into their pockets. So if you want to become a miner, you have to figure that out. So I went over to NiceHash and they have this all calculator figured out. So let's look at some prices real quick. So for the BitMain Miner 17 Pro, you're going to be making about $15.30 a day. And this is calculating the electricity. I use the average of like 10 cents per kilowatts. Let's use the average. Around the United States, it's like between 10 cents and 15 cents. So whatever it is on your electrical bill, check that out. But I use 10 cents and you're making $15 a day. That is a lot of profits. What is that per month? Per month, that's $473. Now, this is on the exact price of what Bitcoin is right now. So if it falls, those profits will come down lower. If it goes up, those profits will go up higher. Check out the links to this miner at the bottom of the description. Now with the S17 Plus, you'll be making $11.80 per day on this miner. Calculating that up for the price of Bitcoin currently, you'll be making $363 a month. So you can calculate that up yearly and you can see how much profits these guys are making currently. Also, another thing to calculate in there, the price of moving Bitcoin is like $10 right now. The blockchain is very congested. This is something that needs to be fixed in the future. So you're going to be making money off of the ledgers and the transactions that are going through. So there's a lot of money to be made on the Ethereum network by staking or still mining, and a lot of money to be made on the Bitcoin network. Both of these miners have links at the bottom of the description, so check them out at the end of this video. So there are 3 videos from CNBC from yesterday. I want to play all 3 of them for you to see what the institutional investors are talking about. Watch them and pay attention, because when big money talks about a certain product, they can actually change the price within days, very, very quickly.
Right now, JJ Kinahan, Chief Market Strategist at TD Ameritrade, and Ali McCartney, Managing Director at UBS Private Wealth Management. Ali, always love to hear from you what your wealthy and sophisticated investors are doing. How much interest is there right now in Bitcoin, and what are you telling them to do about allocation?
There's a lot of interest, and there has been a lot of interest for a significant amount of time. Remember that a lot of very wealthy individuals, even those that have made their money in very traditional finance sources, take risk, and they understand the concept of taking risk. Now, the weird thing about this is you're talking about sort of a means of exchange, a currency, which exactly opposite of a normal currency, doesn't have the ability to pay your taxes and has, at this point, very limited demand, but unlimited supply. I think the thing is that individuals that act like institutions, i.e. not retail individuals, are getting in now as an asset allocation play. And that, I think, is why you see such a run-up, is that you're having some really big buys.
What about you, JJ? Have you guys had to expand your offerings in the space at TD Ameritrade for retail investors?
Yeah, you know, Sarah, we don't have Bitcoin itself, but the products we do have, including Bitcoin futures, you know, we see 150% lift there. Some of the names like Grayscale Bitcoin Trust, we see 170% quarter over quarter growth. Then you have things like MSTR, which in August invested so much money in Bitcoin. Quarter over quarter, we see a 1,400% lift in the amount of trading and positions held there. So what's really interesting to me about Bitcoin, maybe more than any other product I've seen, is the fact of how many people become more interested as the price goes higher. I guess that makes sense, of course, but the amount of people we see that really have interest as it starts to starts at that 10,000, then over 20,000, we really saw a flood of people become much more interested in it than we had seen at any other time before this.
Ali, when you speak to your clients about Bitcoin, do you get a sense of what they want it in their portfolio for? Is it to go alongside their most risky bets like Tesla and Zoom, or is it something that they see as a potential hedge to equities and something that they want to buy in place of their bonds?
Yeah, I think to a certain extent it's been a moving target, right? The story of the first couple of years was that here was a store of value that was apolitical and could be a diversifier. And then you fast forward, and to my colleague's point, you see the numbers going up, which always gets people interested. You see the adoption in the form of Bloomberg Galaxy Index. Then you go to Fidelity being a custodian. Now you're a PayPal letting you buy and sell with it. So adoption's going up, price is going up, and the lack of available alternatives in the market in terms of being diversifiers, right? Bonds have largely gone out the window in terms of the relative risk return. So I think all three of those, and once you see the credentialing mechanisms of large pension funds and sovereign entities, which you've just seen major buying, which I think is what's taken this from sort of 25,000 up to where it was this weekend, you start to really get some credentialing mechanisms. And by the way, unlike a retail investor, the assumption there is that these aren't speculators. These are long-term buy and holds that can create some sort of substantive floor for the currency.
How does it correspond overall, JJ, with the mood and the appetite for taking on risk from retail investors right now, whether it's stocks, tech stocks in particular? How closely is it tied?
Well, I think the bigger thing for this that we really try and educate people on overall, Sarah, is the fact that it trades nonstop. It keeps going. As you know, Ellie just got done talking about it, trading this weekend. I think that's a big, sort of step for many people. What is interesting, and I think Ellie brought up a good point there, is we also see a lot of our older skewed investors who want to be involved there. I think there's this sort of narrative out there that it's only young people who care about this. We've actually seen a very nice mix in terms of the ages that are attracted to the products that are related to Bitcoin, and I think that that's very important. So you do have people who are using it obviously speculatively, but you have people who have it as part of a core of their portfolio. Of course, maybe not as big a percentage as they're going to have in fixed income or things like that, but there are people who are now starting to add more to their portfolio, so it's starting to become more and more of an accepted asset base.
JJ and Ali, thank you both for joining us.
Hello all, and welcome to the ETF Edge portion of Halftime Report. I'm Bob Pisani. Bitcoin hit a record high over the weekend. Jan van Eck has filed for a Bitcoin ETF again. He did that last week after several attempts over the last few years. He joins us again, along with Dave Nautic from ETF Trends. Jan, you just filed for that Bitcoin ETF again. There's a new SEC chairman that's going to happen later this year, this time around. What do you think the chances are the SEC will finally approve that Bitcoin ETF?
Well, hope springs eternal, Bob. Happy New Year. I think basically we hope that the changes in the commissioner level might change the SEC's attitude, but they also gave some guidance a couple of weeks ago on how broker-dealers can custody Bitcoin safely. So hopefully there's been, they're a reflection of what's happening in the world, which is an increasing acceptance of Bitcoin everywhere.
Yeah, I think it's going to be a tough one. I see the fact that there's a new SEC chairman coming in. We don't know who that will be yet. We have an acting chairman, but I think there's still a lot of resistance to that coming around here, but you've been very, very indefatigable in your attempts to pull that off, and I laud you for it. Dave, I got to ask about the markets right now. I see enormous volume. I mean, 10 times normal volume in some of these ETFs, growth and value. Everything's down 2%. This seems like a broad takedown of the market today. Can you give us your take on what you think is going on?
Yeah, absolutely. This is definitely a classic risk-off trading day. We have the uncertainty around the elections. We obviously have very high valuations folks are considering. We're coming into the new year. People are positioning. They don't want to be in that risk. That's why you see, the S&P 500 down 2% and things like gold up 2%. That's almost the definition of a risk-off trade today.
We're seeing
okay, guys,
still
thank you.
some institutional interest in Bitcoin. Initially, we saw it going in, buying Bitcoin. And you could tell that because we saw about 35,000 Bitcoin leave Coinbase alone, which is one of the larger retail exchanges. When sizes of that amount leave an exchange, particularly that exchange, that means it's going over to an over-the-counter market, which means there were buyers. Somebody came in and bought a significant amount, somebody with an institutional size amount. Subsequently, there's been some institutional selling in the over-the-counter market. So, again, Bitcoin is a very volatile asset still. Nonetheless, there is increased institutional interest in it. Institutions these days, 5 years ago, 4 years ago, 3 years ago, even when you talked about institutional interest, you meant mom and pop shops. Now you're starting to look at the Mass Mutuals of the world. BlackRock's more interested in it. You have Paul Tudor Jones, Stanley Druckenmiller. They're talking up Bitcoin. So it's a different environment than it was a few months ago, even.
I'm going to speak in very broad terms, which is dangerous, Lawrence, when it comes to talking about anything crypto related. But as you know, but hey, it's TV. They have tended to trade together to a point. Let's bring up that graphic we just had up. Bitcoin is now down 10%. You have, I think it was Ethereum. I saw it, glanced at it, might be
Correct.
flat or even slightly higher. I know Goldman likes Ethereum. Are they starting to become their own things? Are they starting to trade independently, or do you still see them sort of moving with the overall crypto tide?
Over the weekend, getting back to that, there was some rotation into so-called altcoins. If you look at the 20 assets that we track in the CoinDesk 20, almost all of them are up except for Bitcoin and one other one. So overall, the alts are up, particularly if there's going to be an alt that's up right now, it'd probably be Ether, because it's the second largest by market cap. It also has its own narrative that's separate from Bitcoin. It's used as the underlying network for a lot of DeFi, which decentralized finance, which is a new realm in finance and crypto finance that's been growing over the past few months. So that's where a lot of interest is now. People are turning, they're saying, okay, what's the next hot move? And so, of course, some people are looking at Ethereum, and they're also rebalancing their portfolios such to do that.
Yeah, it's Ripple XRP that is up right now. There's so many, by the way, coins. I mean, there's no way to get into all of them. There are some that are trading for pennies, some that are obviously tens of thousands of dollars. Right now, Lawrence, what would be the most interesting storyline around Bitcoin that you are following?
So again, it's the institutional interest still. And of course, there is the idea that over the long term, we're going to start to see some more interest, just because from a portfolio management point of view, correlations to S&P 500, correlations to gold. When you look at the 90-day correlation with gold, it's 0.25. That's the correlation coefficient. With the S&P 500, it's 0.22. So even though you have a high volatility asset, you have the at the money volatility, implied volatility in the options market for Bitcoin right now is about 100%. Nonetheless, you had high returns. So when you have high returns, despite high volatilities and low correlations for portfolio manager, you look at that and you go, okay, well, I need to rebalance my portfolio in a way that makes sense. And so you might see more people just doing it from that perspective, adding crypto to their portfolios, just because the correlations are lower relative to other asset classes.
Okay, we're back. Hey, thank you for coming here and watching the video. hit the like button. Please hit the like button so the YouTube algorithm can bring more people to my channel. Hit the subscriber button so every time I upload, you can see my videos on your feed page, and hit the notification bell so it can notify you that I made a video. Thank you guys for watching, and all you guys have a good day, and all you guys have a good night, and enjoy the crypto life. Peace.